Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, in news out at the top of the hour, Philippine inflation for October comes in at 1.7%. That is the same as September's figure, slower than the 2.3% seen in the same month last year, and also slower than the business world's median 1.8%, well within the higher end of the Bangko Central's October inflation estimate of between 1.4 to 2.2%. The Bangko Central's 2025 inflation forecast at 1.7, while its 2025 inflation target remains between 2 to 4%. Elevated food prices due to the typhoons, higher transport and fuel, as well as electricity costs drive inflation for October. In studio, analysis on inflation and growth with Reniel Mat Erese, economist of Economia Advisory and Research Inc. And an excerpt of my thought leaders interview with Meralco's Chief Revenue Officer, Bertie Galuz, on the cost of power.
Generation costs or purchase power costs varies, of course, with the peso-dollar exchange rate, the foreign exchange rate, as well as the cost of fuel and the fuel mix.
And that is a live stream from the Philippine Statistics Authority in Quezon City, where National Statistician Claire Dennis Mapa is currently addressing questions from the media on Philippine inflation. Let's listen in.
5.1 noong September. At yung gasoline naman, negative siya but lower negative inflation rate. Ito ay nasa negative 0.7% nitong Oktubre versus 0.9% negative din noong September. So itong dalawa kasi ito naman may impact dyan yung ating exchange rate kasi we're buying the goods no in US dollars. So yun yung tinitingnan, and again yesterday there was also another adjustment in the prices, pump prices, no. So we will be monitoring this moving forward. Thank you.
Thank you. The October inflation data, headline inflation held steady at 1.7%, unchanged from September, but slower than the same month last year. The figure is also slower than the Business World poll median estimate of 1.8% and remains within the Bangko Central's forecast range of 1.4 to 2.2% for the month. Inflation also stays under the central bank's 2 to 4% target for the year. The central bank's full-year forecast is at 1.7%. National statistician Mapa, whom you're seeing on screen right now with the live stream going on, said the year-on-year decline was mainly because of the drop in prices of food and non-alcoholic beverages. And here's how the inflation trend looks following October's result. A steady rise since July, as you can see there, from 0.9, so a fourth straight month of an uptrend, although we've seen same pace of a change of 1.7% in both September and October. The last time we've seen an ascending trend here was back in September of last year, as you can see on that chart, when inflation peaked in December before coming back down for the most part of the earlier part of this year. Let's bring in some quick analysis from our economist in studio, Reniel Mat Erese of Economia Advisory and Research Inc. Good seeing you again, Matt. Welcome to the program. Okay, so 1.7%, you were bang in line. That's what you had in the Business World poll.
Yes.
What do you make of the result?
It's quite expected because of two reasons, from both the demand side and the supply side. From the supply side, we saw some changes with regards to the rice importation ban, with regards to typhoons affecting agricultural output, and with regards to demand, we can see that it's on the ascending trend because we are going towards the Christmas season. So both of those factors combined will definitely be the reason behind the rising inflation.
Let's take a look at that ascending trend. If we could just bring back the chart, because it was pretty interesting. From July, we came all the way from 0.9. And then we've hit That's sort of an ascending trend to 1.5%, 1.7, and a bit of a stopover right now.
Yeah.
We're at 1.7. Inflation still rising, but at that same pace as September. And we're hitting already the holiday season, that quarter when really the spending rush happens.
I think last month's big jump from 1.5% and then to 1.7%, those are primarily driven by lower agricultural output and lower, I guess, supply chains being affected by typhoons and natural calamities. So those are the primary factors behind the big jump. But we can see that inflation is still a bit stable. The driving factors behind inflation is still benign, I would say. It wouldn't be a major concern with regards to Bangko Sentral bringing much more intervention or doing much extreme moves in combating inflation, because the movement of inflation from the start of the year until now is still within the BSP's targets. So I don't think that a lot of factors are becoming concerning. It's more about a factor of natural calamities, seasonality, and of course the holiday season.
Well, let's tease that out and the variables and constants that we're facing, because typhoons are a big variable. And back in October, we've seen Typhoon Paolo. So that's a big one that impacted the eastern side of the Philippines, eastern Luzon. And that was also compounded by the rains that we've seen with Ramil as well as Fengshen. So presumably there could have been an increase in prices in food, but it didn't happen. How come?
I think it's also because during that time, rice importation is still a big thing. We can still import a lot of rice, and rice is a big part of household spending. Therefore, we can see, even if we go deeper into the inflation details, we can see that inflation for the bottom 30% of households is still on a negative trend. It's because food importation is still good, but we can see that the president decided to bring back tariffs, decided to limit imports again, because on the supply side, it's now affecting farmers' incomes. So now that we've solved at least a bit of the security problem on the demand side, it's now time to help the farmers. So now it's a bit of a balance between allowing rice prices to increase a bit, but at the same time, it's not too much that households cannot afford it anymore.
Well, it was pretty contested when that came through, the rice import ban.
Yes.
There were sectors that didn't want it, but now you're saying that it's working out?
Yes, because it's a balancing act really. Because on the demand side, of course, bringing in more rice supply will definitely bring rice prices down. And we saw that during the last part of last year until the first half of this year. But now during the second half, we can see that the government have decided to shift their strategy, and now it's time to help the farmers, because the rice imports lowers their income, because of the influx of supply, there will be more competition. It's hard to compete in terms of price, because foreign countries such as Vietnam, Thailand are much more productive when it comes to rice production. So now they decided to shift, and rice prices are now starting to increase a little bit.
And the government's decided to extend the ban on rice imports all the way through the end of the year.
Yes.
Is that going to be good or bad for inflation?
For inflation, it will definitely cause it to increase a bit, and add to that the Christmas season. So we can see a bit of inflation going up to around, let's say, 2%. But I don't think that it warrants extreme moves from the government or from the Bangko Sentral ng Pilipinas, because it's still within their target of 2 to 4%.
Electricity costs, that's one of the components of inflation. The higher power costs always mentioned as one of the reasons why inflation's gone up or is going up. I did have a moment to speak with Meralco's Ferdy Geluz. He's the Chief Revenue Officer, and here's what he had to say about the cost of power. Let's both listen in.
Well, the purchase power cost is basically generation, generation plus transmission. As far as distribution charges is concerned, it's actually the same, no, flat since 2016. So for the last 10 years or so, distribution charges remain the same. But of course, generation costs or purchase power costs varies, of course, with the peso-dollar exchange rate, the foreign exchange rate, as well as the cost of fuel and the fuel mix. So right now, I think we're heavily reliant on natural gas, LNG, And of course, there's fluctuation, and of course, it's dependent on the foreign exchange. But I think it's our energy mix is actually contracted in a way that aside from cost is a consideration because we are actually mandated to procure the least cost manner, but of course the number one priority is really energy security to ensure that there will be power once the customers turn their switches on. So we're actually working with DOE and ERC in terms of our power supply contracts, and we ensure that we get the proper approvals before we actually contract them. And of course, it's based on the forecast as well as the power development plan of the government.
So it's reliability for one, but for the customer, it's affordability. You
Yeah.
mentioned the forex,
Yep.
which is much of a variable
Yep.
for the purchasing of
Fuel.
fuel. Now that the peso's fallen to a low we hadn't seen this year, what might it mean for the average retail rate for the customer?
Well, I think that, well, the general tendency of forex, the forex increases, so technically there will be an impact on the fuel rates as well as electricity rates, because we actually procure generation from the market, from market, of course, through contracts, and contracts is usually based on the cost of fuel. So there's a tendency to really some sort of increase. No, of course, we manage it by balancing also our purchase in the market. If the open market or WSM prices are low, we some sort of also buy from the market in a quantity that we can, because of course we have to honor our existing contract.
That was Ferdy Galuz of Meralco. I'm still with Matt Erese of Oikonomia. So many ways to slice and dice that one, and a big explainer on why the cost of power might go up. What do you make of what Ferdy said?
The big factor behind the increases in generation would be fuel costs. It's because with regards to international fuel markets, it's starting to recover now. We can see that oil prices from both Dubai, WTI, and other oil indices, they were a bit lower during the middle of the year. But now it's starting to recover now that Trump's tariffs have become much more clearer. And of course, with domestic factors, we can see that the peso to dollar exchange rate is starting to falter, and we're starting to reach 59 levels. And both of those factors combined will result in much more expensive generation charges.
Well, just taking a look at the peso, I was looking at the open and how it's reacted post-inflation. It's actually weaker, 58.65 to the dollar, coming all the way from 58.515. But when I took a look at the PSEI, it's open higher, 0.4%.
Yes.
Quite far away from where we're at about 72 hours ago, when it fell to below 57 or below 58. What do you make of the reaction in the markets?
With regards to the PSEI, stable inflation is definitely a positive market catalyst. It shows that government moves are working. It shows that inflation is still in the positive, in the green. Therefore, there's still spending activity, but it's not enough to warrant extreme moves or to be concerning. But with regards to the exchange rate, we can see that the slight recovery this week, it's more of a transitory action from the markets, but on a longer term, it's still affected by major fundamental news, such as the corruption scandal, such as international market activities or situation. Those are much more bigger factors. So compared to last month, I think that's the better time frame to analyze the exchange rate. It's still elevated, and that definitely affects import costs. Therefore, it affects rising inflation.
But when you layer up the OFW remittances, that usually comes in
Yes.
a big surge as the Christmas season comes. A lot of the relatives, families, and friends remitting money from
Yes.
overseas. Could that temper any further falls in the peso?
Yes, I don't think that we should be concerned with the exchange rate reaching 60 pesos per dollar. I think 59 is already the ceiling. And now that the exchange rate has reached 59, and we can see a slight recovery because of both OFW remittances, and we can expect the Bangko Sentral ng Pilipinas to do some moves such as through the market, selling of dollars, reserves.
Do you think they did that when the peso nearly hit 60?
It's hard to tell. We can see that maybe in next month's report of the reserves, but we can definitely see that we have enough power to stop it from reaching 60, at least for the short term.
But yeah, we can't keep doing that because we only have so much dollar reserves to go with. You did make a mention of the Bangko Central's monetary policy action with today's 1.7% on inflation. How do you think they'll decide in December, given all the other factors like probably a weaker peso and possibly a weaker PSEI?
The priority of the Bangko Sentral ng Pilipinas is always price stability and then economic growth. Then later on would be on capital markets, on exchange rates. So with regards to price stability, I think it's a good news that it's still 1.7%. It's still below their floor of 2% target. With regards to the PSEI and the overall economic growth, it is still below expectations. It is still underwhelming. Therefore, I don't think that the Bangko Sentral ng Pilipinas will deviate from their monetary policy easing path. They will continue cutting rates. Probably during their December meeting, they will cut another 25 basis points because, again, price stability, good, but economic growth, it's underwhelming.
Exactly. So could they cut by 50?
50 would be a bit extreme because holiday spending would make inflation reach maybe 2% or even higher. And a 50 basis point would be a big catalyst that would maybe exaggerate inflation numbers and other factors. So I don't think 50 might be a bit too much, but maybe the frequency of cutting may change and may be much more frequent now.
Final question. GDP is coming out on Friday.
Yes.
What are you expecting?
It's a bit underwhelming. I expect it to be at 5.3%, mainly because of two factors. Lower government spending because of higher scrutiny from the corruption scandal. And as a result, investments will also go down because foreign investors will pull out, would be hesitant in investing in the country because of those news articles that's coming out.
Could that be an understatement? Because I've just spoken with two analysts yesterday, 24 hours ago, and the ASEAN economist of Nomura said it could go as low as 4.3 for the third quarter because of the corruption scandal.
Well, that isn't impossible, but I think it's a bit too low. I expect it to be around, I guess the floor would be around 4.9, 5%, and then the ceiling would be around 5.6. But overall, I think the general consensus among all economists is that the corruption scandal is definitely bad for economic growth.
All right, well, we'll leave it at that. Thank you so much for your insights. Matt Terese of Economia Advisory Research, Inc. And in other news, at least 52 are reported dead due to Typhoon Tino, according to the NDRRMC. Most of the fatalities are from Central Visayas. 10 others were injured, while 13 individuals still missing. The agency says these figures are still subject to validation. Meanwhile, over 700,000 people across 7 regions have been affected, with around 100,000 families seeking shelter in evacuation centers. Still in Typhoon Tino, the storm is now moving faster and is currently over the coastal waters of El Nido, Palawan. It still packs maximum sustained winds of 120 kilometers per hour, with gusts of up to 165. The typhoon is expected to cross northern Palawan this morning before heading toward the West Philippine Sea. It may exit the Philippine area of responsibility tonight or early tomorrow. Tropical cyclone wind signal number 4 is still hoisted over the northernmost parts of Palawan, including the Calamian Islands. Signal number 3 is in effect over northern portions of Palawan, including Cuyo Islands. Meanwhile, southern Occidental Mindoro and central Palawan, including Kalayaan Islands, are under signal number 2. And under signal number 1, the rest of Occidental Mindoro, including Lubang Islands, Oriental Mindoro, southwestern Romblon, southern Palawan, including Cagayancillo Islands, and Antique, including Caluya and northwestern Aklan. You're watching Money Talks. We have world news coming up. The U.S. government shutdown has tied the record for the longest ever closure of the federal government. And the Vatican instructs the Catholic faithful not to refer to Mary as the co-redeemer of the world. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The next economic data to monitor is the third quarter GDP out this Friday. Economists we spoke with see potentially slower growth due to the flood control scandal.
Generally, if you look at the trajectory of the GDP, it's definitely tilted on the downside given the lack of growth drivers.
2 months down the road, we've had spending being curtailed quite severely, and that's just the start. So I think for the next few months, if you look at past episodes, of course, this one has a much bigger scale. You'd probably see a bigger drag on growth as we go through the rest of the year.
Investors also keeping watch of the biggest IPO listing for the year in the Philippines, Maynilad.
The cornerstone investors are really showing their vote of confidence to this water franchise holder. I think it's really a strong buy for people who want steadiness of the cash flow, strong operating performance, good profitability, and dividend yield.
And we're covering Maynilad's listing at the Philippine Stock Exchange at 9:30 a.m. Philippine Standard Time on Monday, on November 7th. Let's take a quick check on the Philippine markets. PSEI opens this Wednesday higher by 0.4% following the inflation results, 5,891. Bargain hunting and net foreign buying pushed the local bourse to rebound yesterday by 0.6%, taking advantage of cheap prices after the stocks closed Monday to their lowest in 3 years. The broader all-shares index advanced by 0.25%, with local counters a mixed bag. As for the Philippine peso, it opens today a tad weaker, 58.65 to the dollar. Peso closed yesterday stronger, 58.515 against the greenback. The 10-year government bond yields ticked down to 5.927%. And comments from the CEOs of Morgan Stanley and Goldman Sachs stoked fears of a potential market bubble, pushing indices into negative territory yesterday in the U.S. The CEOs speaking in Hong Kong warned that recent winning streaks make stocks vulnerable to a pullback, with trade tensions, bubble worries, and credit jitters all on the horizon. The Nasdaq fell by 2% and the S&P 500 by 1%, their biggest one-day percentage drop since October 10. The Dow tumbled by 0.5%. 10-year Treasury yields ticked down 4.09%. Gold prices went into a correction to settle at $3,947 per ounce. U.S. futures point to a decline when the markets open later tonight Manila time. The Nasdaq falling 0.8%, S&P 500 tumbling by 0.5%, and the Dow slides by 0.8%. Asian markets mirroring Wall Street losses this Wednesday. South Korea's Kospi down nearly 5%. Japan's Nikkei 225 slides nearly 3%, and Australia's ASX 200 tumbles by nearly 0.5%. headlines from around the globe in the U.S. The government shutdown has entered its 35th day on Tuesday, matching the record set during President Trump's first term for the longest in history. Republicans and Democrats continue to blame each other for the standoff, but there are reports saying some senators are holding closed-door negotiations to end the shutdown. Still in the U.S., former Vice President Dick Cheney died Monday night at the age of 84 due to complications of pneumonia and cardiac and vascular disease, his family said. Cheney is regarded as America's most powerful vice president in history, serving from 2001 to 2009. He was a driving force behind the U.S.'s decision to invade Iraq in 2003, making the case that Tehran had a stockpile of nuclear weapons and its president, Saddam Hussein, had ties to al-Qaeda. No weapons were found, and the 9/11 Commission report disputed links between Hussein and al-Qaeda. And in the Vatican, Pope Leo has approved a new decree saying Jesus alone saved the world. The decree instructs 1.4 billion Catholics worldwide not to refer to the Blessed Virgin Mary as her son's co-redeemer. The Vatican says, quote, "This only creates confusion and an imbalance in the harmony of the truths of the Christian faith." And here at home, MediaQuest officials are advocating for media literacy in the age of rampant disinformation and AI. Speaking before Truth Under Fire, the Philippine Media and Information Literacy Conference, or MILCON, MediaQuest Chairman Manuel V. Pangilinan and President and CEO Jane Basas say their goal is to push for the truth, as falsehoods corrode not only an organization but also the country. MILCON is part of MediaQuest's advocacy, Think Muna Philippines. Signal and the owner of this channel is part of the MediaQuest family.
Through Think Muna, we call on our people to think before they click, to question before they share, to ask not only about the content they encounter, but also their own biases. When truth falters from attacks, confidence wavers, and when confidence collapses, eventually, so does our economy. Maraming bumabaluktos sa katotohanan, pero mas madami tayong mas gusto ang katotohanan.
That media and information literacy, or MIL, is no longer just a soft advocacy. It is a national survival skill. It is the digital equivalent of learning how to read. And we, as a major stakeholder in the information system, have a moral and corporate mandate to lead this journey.
And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.